In this episode, we discuss the 3 biggest myths that many people believe about banks and how these myths are dictating your behavior and your ability to build wealth. She's Holly, and she helps people find financial freedom.
He's Nate. He makes sense out of money. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered.
Well, everyone, welcome back to Dollars and Nonsense. As always, we love to have you here. We look forward to this episode. Just another encouragement to you all. If you are really enjoying this, if you wouldn't mind giving us a review or rating the podcast or sharing it on social media or things like that, it really helps get the word out of the podcast and the things we're trying to help people accomplish with their money. Would love to have that. But today, we're going to dive right into banking myths. And you probably hear us talk a lot about banking. Whether it's the personal banking, becoming your own banker concept, or just how you can probably tell we don't really care much for banks in general. And that's probably more in line with what this is. Not only do we feel that banks can be a little deceptive in how they operate, but also what we believe about them can impact how we think and what we do with our money. And that can cause problems. So today we're going to nail down 3 myths that a lot of us do believe about banks or don't understand about them that causes confusion, but also it dictates our behavior at times. So Holly, let's just jump right in. What is one big myth that a lot of people have when they think about the banks?
I think one of the biggest myths they have is that banks only make money when I borrow from the bank. I think you just have to realize that banks are making money every single day, whether you borrow from it or not. I mean, money doesn't really sit in the bank. Would you agree, Nate?
Yeah, absolutely. Sometimes we think that if we don't have any loans, we're really kicking it to the banks. Like the banks are only interested in lending you money. And that's the only way they make money. Well, to some extent, yes, but to be able to lend money, they have to have money. And where do they get that money? They get it from you and me. There's a myth out there that people think that the banks only make money if I'm borrowing, when instead they're actually making probably even more money when we deposit it than just when we borrow from it. That's why they can offer things like a free checking account. Have you guys ever wondered why when you deposit money in a bank, they don't charge you to keep it safe? They got to pay staff to go in and help you withdraw cash, deposit checks, and there's expenses, obviously. And if you don't borrow, they're happy just to do all that stuff for free. Man, that does sound a bit too good to be true.
It kind of goes along with the saying that nothing's really free in life, Nate. And I mean, banks aren't in rundown buildings either. They're pretty nice, and they got comfy chairs and all that. You think you did well, it's free. It didn't cost me anything to open it. But yet, how much of your money is really available for you to use? And how much of those deposits can the bank use?
It's odd for a business to service you without charging you. If that was the case across the board, they would all go out of business. So it makes sense if we've got a loan with them that they're happy to service because we're paying them interest and they're happy about that. But whenever you don't have loans with them, why are they so willing to serve you without charging you? It sounds like it's free, but in reality, it's costing you something that I like to call opportunity cost, if you would. They're not charging you any money. They're just simply taking your money and they're lending it to other people, and they're paying you maybe 0.5%, maybe 1% today, maybe even less, maybe 0% on that deposit, and they're lending it out at 5 to 10%, depending on the type of loan, and it's actually your money at work. They're just not giving you any of the money back. So it's not that you have a free checking account. They're not serving you for free. They're making a ton of money off of your money. That to us, to Holly and me, when we see this, we think that's actually rightfully your money, or at least it should be. When my money earns money elsewhere, I should get a decent clip of that. But at the bank, it's pretty obvious that we are getting screwed there, and we are thinking they're so kind to offer us these free accounts. Cash is probably the most expensive thing. We think it's free, it doesn't cost us anything to put it in. That's fine, but it's costing you, if you look at how much money that money could have earned if we did something else with it, huge amounts of money in these quote-unquote free accounts. It's certainly costing us quite a bit.
Well, even yesterday, Nate, I was talking to a mortgage broker, and he's like, you don't have too much money in that bank account. More than one bank account. I'm like, yeah, all my money's in cash value and life insurance. It's really in my life insurance because I don't want to keep so much money in the bank that I can't use it. And even banks, they don't have much money in their own bank when you go in to withdraw money and stuff. They only have a set amount of money for the day. And that's because the dollar that's sitting in that teller's drawer is what they are most liable for. It's the most expensive thing because they can't keep that money in circulation in loaning out and making money off of it.
The obvious questions are, well, if my money is working, what's it working in? And I'm like, oh, we got loans. And okay, and how much are you lending it out for? And they'd say, oh, 5 to 10%. You're thinking, you're sitting here, man, you're paying me 0.5% and you've got it loaned out at 5%? That seems like a pretty hefty profit when it's my money. But that's how it works. That's absolutely so. There's a myth out there that bank accounts don't cost anything. And especially when we talk about like life insurance policies, which is a little bit different. If we wanted to branch into that, we could, Holly, but life insurance policies have a cost to join, you could say. However, they don't actually keep any of the profit. Your account, the profit it generates all goes back to you as opposed to a bank. The banks are the reverse. They don't charge you to put it in. They just don't give you any of the profits that it earns. So it has to be done one of the two ways. Either the bank could start charging its depositors to deposit money there, but then they could promise that they're going to, all the money makes, they'll give back to them in profits. Or they could do this weird deceptive thing where they don't charge you anything to put it there. They just keep all the money, practically all the money that it makes. And to us, it actually is way more expensive to let them keep all that money. They're making huge amounts of money off of us. So there's a myth out there that bank accounts are free or they can be free, when in reality, the banks make money whether you borrow from them or not, and they don't care if you borrow from them or not. They just want your money one way or the other.
Which kind of leads us into the next one, that the myth that your money in the bank is safe. I mean, you shared a pretty interesting statistic with me today. I'm just blown away thinking about how many people really believe that their money is safe because it's protected up to 250,000 or this or that. I mean, so many of us believe that, Nate. We put our money in the bank and we don't think anything of it, and we think that's our money, it's safe, they're going to give it back to me.
I think most of us would agree that money in the bank is not actually safe, but what they're really talking about is the fact that the federal government through the FDIC is insuring the deposits. I think all of us would agree that when banks actually take our money and lend it out, and they're lending out, by the way, for those of you who didn't know, more money than is in deposits. So for every dollar you deposit, they're actually legally allowed to lend 10 times that, which is ridiculous. But regardless of that, it's a pretty leveraged, risky business that if the government didn't come in and say through the FDIC that we're going to insure it, I think most of us would agree that the money's actually not that safe. Banks go under at a decent clip, especially go back to the financial crisis when those big banks had to be bailed out. If they hadn't been bailed out, people would have lost a ton of money, disappeared, gone. And so I think all of us can agree the banks are not really safe. The FDIC is what we're counting on. And as Holly said, a statistic out there right now, there is currently in excess on an average day about $9 trillion in deposits at the banks across the country, about $9 trillion in deposits. How much does the FDIC have on cash at any given time to insure those $9 trillion deposits that they're promising? They have $25 billion. We're talking $9 trillion compared to $25 billion. The discrepancy between those two, what the FDIC actually has and what they claim to be insuring, is so immense. My mind is not even smart enough to fathom $9 trillion and compare that to $25 billion. It's like a drop in the pond.
It's not even comparable.
Have you ever wondered how to stop worrying and just make and keep more of your money? We believe in challenging the status quo. We believe in defying conventional wealth tools while maintaining traditional values. After all, most of those conventional tools only ever seem to make someone else on the inner circle rich. You can become debt-free, in control, secure, and achieve financial significance. Private family financing can be used in your life and even your business. Let us help set you free from worry. Visit livingwealth.com/freedom to receive your free copy of the Tree of Wealth. You'll learn about the tools banks themselves use and rarely speak about openly. These are the strategies used to launch Disney, JCPenney's, and countless successful families. For more than 46 years, Living Wealth has focused on treating clients with respect and honesty while helping them achieve financial freedom. Learn how to turn your hard work into significance. Visit livingwealth.com/freedom to instantly receive your free copy of The Tree of Wealth. You'll be enabled to have cash today and in the future. It's more than mere infinite banking. It's private family financing. Don't let banks and Wall Street dictate your financial future. Go to livingwealth.com/freedom to instantly receive your free copy of The Tree of Wealth. Now, back to Nate and Holly.
Listen to what he said. Your money's insured by the FDIC, supposedly, yet they only have 25 billion, and you're one of all the millions of people that are making deposits of $9 trillion.
The chances that the FDIC, in a real run on the bank, in a real financial crisis where banks are going under and filing bankruptcy and they're having to send money to depositors, the chance that the FDIC runs out of money very quick is extremely large, which then I don't know what's going to happen. I guess the federal government's going to start printing money to send it back out, I guess. I don't know. But that's a concern to me regardless. And honestly, I don't even want to be a part of that system. If the banks go under because their crazy business practices cause them to, they go under. The FDIC starts sending money. They run out of money really fast. The next thing they're going to do is essentially ratchet up inflation, print money to send, I guess, or something. But either way, I guess what I'm trying to get at is I don't even want to be a part of the problem. That's one of the reasons why we're trying to create this becoming your own banker movement, is to say that the way banks run a business where they can leverage 10 times their deposits and lend it out is insanity and is extremely risky. And the only reason it makes any sense is due to the FDIC and the government backing. But if something actually happens, the brunt of it's going to fall on all of the taxpayers, I guess, to help cover it. And when that happens, I would much rather have the whole country be doing this privatized banking strategy where it can't happen. Then we won't have to deal with the devaluation of our dollar and all these other things that come to play.
When you said it's 10 times, that's $90 trillion on 9 trillion that's deposited they could loan out. Okay. It's not actual money they have. So yes, they have 9 trillion deposited, but they're loaning out $90 trillion. Like, just fathom that and the protection of it. I mean, the one thing that makes me feel safe about life insurance is the life insurance company is mutual, but it also has to have a dollar to protect my dollar I give them. They can't loan out money they don't have either. So it literally is dollar for dollar. We're not talking about mythical money out there that doesn't really exist. Like, we're talking about that. And to me, that's more safe. I get asked a lot, Nate, well, our insurance company is backed by the FDIC. No, they're not. But they also don't practice the same business practices.
They don't need,
because they have to have the money when they take your money. The bank doesn't have to have money to take my money. I mean, do you think our banks have $9 trillion? You know, especially when they're loaning 90 trillion out, if we just think about that.
I mean, it is true that the insurance companies have the state guarantee associations which act similarly, but they don't need to be insured like this because the business itself is not as risky as the banking business is. That's why you see many more banks fail than insurance companies fail over time, because they're leveraged so out of this world. And, you know, myth number 2, the myth that the money in the bank is safe. It's insured. I don't know what's going to happen. There's a tiny amount, $25 billion at the FDIC right now, guys. When that runs out in the next crisis, I don't know what to tell you. I can't tell you your money's going to be safe because I don't know what's going to happen when they got no money. We'll find out.
Even when we had to bail out the banks, it wasn't the FDIC bailing them out. It was us, the people, basically bailing out the banks. Even in the Depression, the same thing happened. Banks went under and people lost all their money.
There's a freeze on bank accounts, which is very likely in the event of a true crisis like you've seen across the world at various times, where you can't go in and take money out of your accounts because of the run on the banks, because of the lack of trust there. There's a lot of spooky things that can happen, but for some reason we're taught to believe that the money in the bank is very safe, the safest it can be. I would beg to differ on that, essentially.
That leads kind of into our myth number 3, Nate, that we really believe when we're depositing that money in the bank that it belongs to me. They can't freeze my account. That's my money. It belongs to me. It's not the bank's money. It's my money. And yet we don't realize we have absolutely no control over it, because actually, as a depositor, legally, the bank now has the money and they owe it to me.
Yeah, so the myth is that the money that you put into the bank that you deposit legally belongs to you. It does not. As you said, Holly, the money does not no longer legally belongs to you. You do not own the money. When we make a deposit, we actually legally give ownership of the money to the bank. The bank owes you money now, but it's not your money anymore. Every deposit you make in the bank is just a little loan to the bank. Legally, it's their money now. They can do with it whatever they want to. Now, there's different depositor contracts that can dictate the relationship with you, but still, the money legally belongs to the bank now. We've given ownership of the money to the bank.
And the bank now owes you that money. Think about that. If they owe it to you, and we've had to bail out the banks in the past, what's the likelihood you're going to get that money?
Yeah, you're just a creditor of the bank. You just fall in line there. You've lent money to the bank. They file bankruptcy. They're trying to pay off their creditors. You just hope to get some of the money back and hope that the FDIC has enough money to send you your share of whatever they can't give you. You know, hoping that you're early on in the crisis that your bank. That's kind of funny, by the way, that honestly, if it was me, I hope that my bank fails really early on in the financial crisis so I can get a piece of the FDIC pie, because I don't want my bank to survive until near the end and then finally have to shut its doors when the FDIC's ran out of money. Let's go ahead and hope they fail quick. That way I can file a claim to the FDIC, get my money back, and probably just sit on cash in a safe then or something. I don't know.
I don't got much hope. I'm like, oh, how much money do I still have in my bank? Maybe I need to move it again. Get it out there, put it in the safe.
Yeah, put it in the safe, put it in the policy. I mean, that's one of the big differences between becoming your own banker and that strategy, is that you actually own the policy. The insurance company does not own the life insurance policy. It's kind of like a trust agreement where they're just simply the trustee of it. You own it. You're the grantor, and you can determine the beneficiary. They are just the trustee. You're in total control of it. At the bank, the money legally changes hands. It just dawned on me, and I looked it up and everything, that the money that's accounted for in my bank account is actually not my money. It's just a claim to money that I've actually lent to the bank. That's why, as Holly was mentioning, they can decide the rules for you. They can change rules, how much you can take out at any given time, depending on what the government allows them to do in the time of a financial crisis where there could be a run on the bank, people trying to pull their money out, and they just freeze bank accounts. That's because the money's not yours.
It's also just like the fact that when you do a deposit, whether it be large or small, there's always a period of time they hold that money. It is your money. You wouldn't deposited it, whether it be in a check, even a direct deposit, but like, oh, we got to make sure. Then you can have that money. I mean, I even did a cashier's check because the bank didn't have money. They didn't have the cash. So they gave me a cashier's check. You take it to the other bank, and you know what they said? I know it's a cashier's check, but it's a check. Guess what? It's Friday afternoon. And it's a Memorial Day weekend. So guess what? You can have that money on Tuesday or Wednesday. Then it's available to you. How exciting is that? You took money from one account, you put it in the other so you could use it. One bank didn't have the cash, and the other bank says, no, it's a check.
What's funny is I like to always say, if you were to walk in with a bank, you got yourself a $100 bill and you want to make a deposit, you write your name on that $100 bill. You say, this is my money. It says Nate on it. You deposit it, you come back the next day, I'm here to pick up my money. They hand you another $100 bill and it doesn't have your name on it.
Nate, even that same day, it's going to be given to somebody else. You're never going to get that $100 bill back.
They just owe the money to you. And it's not actually yours. They give you back somebody else's 100 and they just moving money around. But anyway, guys, these three myths of banking, the myth that the bank only makes money when you borrow, that's not true. They make money when you deposit. They make probably more money when you deposit. The myth of the bank is safe. That's only due to the FDIC. I think all of us would agree that the bank business practice is unsustainable. Without the FDIC, they got nothing, and the FDIC is pretty broke. So that's a pretty big myth. And the myth that the money is actually your money legally. It's not yours. These three myths can, if we believe them, it can dictate how we operate. And it can dictate how we think and how we compare other things. We have to understand what's actually going on so that we can know what to do. And that's one of the things we wanted to teach today, was that there is another way to do banking as much as possible. We encourage you to look into it. It's called becoming your own banker. We call it private family financing, bringing the money back to the family where it should be controlled. And I think you'll really like the difference between being your own bank and using somebody else's. This has been Dollars and Nonsense. If you follow the herd, you will get slaughtered.
For free transcripts and resources, please visit livingwealth.com/E69.